Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Hey everybody, welcome to today's edition of the Daily Market Commentary. It's the weekend edition. Matter of fact, it's the final episode of the commentary for 2017. Hope everybody had a great trading week, trading day, as we're coming to you on New Year's Eve. So those of you that listen to our daily market commentary on a regular basis know that on the weekends we like to go a little bit bigger picture and take a look at some bigger opportunities, but we will review some of the short-term intraday trades that we found throughout the week. For those of you that are new to the channel, welcome. Glad you're able to find us. We use the same markets every day, and we leave the lines on the chart so that you can see how trades change over time. Last week we had some pretty decent trades towards the end of the week that met entry, so we will go through and cover each of those. So let's go ahead and get into it. So for those of you that follow me on the Twitter feed, I had talked about keeping your stops tight because I really felt like there'd be a sell-off at the end of the day of the S&P, and that's exactly what we had. We had a sell-off at the end of the day on the final trading day of the year. I think that there was probably some profit taking at the end. I think it really just gives you a good opportunity to buy on a little bit of a pullback, as there's no reason to change our overall big picture sentiment. Let me pull this just to the S&P so that we can see without as many lines on the chart. And looking at this on a daily chart, you can see that it did break our little upward trend line. Now, we had talked about in the past on this that we had slowing momentum. And by slowing momentum, it meant that we had started to really kind of come down just a bit with momentum. And I could see us getting a bit of a little pullback. It wouldn't hurt us at all to get a pullback down here in, below the 20-day moving average. I think a pullback below the 28-day moving average would actually be a nice, healthy pullback, shake a few things out. That 20-day typically, I like to call that the bull area, the area between the 20 and the 50 in a rising environment is the bull area, and that's really typically a pretty good buying opportunity. So I wouldn't be surprised to see us get a pullback into this range here. Could even stop at about 2650, where we've got some whole round number support, but you've also got this area right in here that could act as a little bit of demand and support in that area. Taking a look at the NASDAQ. Now, the NASDAQ, on Thursday, we had talked about a potential reversal at this point right here. Now, that trade was found on the 15-minute chart. So that trade was found this little bit of fair price, fair value area on the 15-minute chart. Price touched that level, moved away very, very well. We then got our trade into this confirmation trade area. Now, remember, on these confirmation trades, if price comes into this area and pierces the line before exiting, then it's not going to be a valid entry. And that's kind of what we had here. You can see that price came into this area. Remember, because it's a dashed line. Price came into the area and then continued to fall all the way through it before then coming back up out of the level. So the entry, and looking at that on a 1 hour chart, that entry just gave a little bit of a pierce before what would have been that trigger. So at the very least, you should have closed your short right about in here, and you may still be in that short. Now, if you're in that short, the NASDAQ has come down to a pretty decent buying area, an area that we have used in the past, and this is typically a decent little turning point where we've bounced off of here once before. I wouldn't be surprised to see us get a little bit of a bounce off of here again, and even if it's just a rally up into this 64.19, just keep that in mind as a potential entry point through here. So the NASDAQ trade worked out pretty well for those of you that are willing to take that short on Thursday, and I think that you're going to get another bite at the apple. Let me remove these lines here. I think you could get another bite at the apple. We got to remove this one as well. When price returns to this area here, I think here you're going to get another chance to get a short for price returning right through here. Remember, it's on the hourly chart, so we're using the green lines to indicate the possible turning point right through there. Next market. Crude oil. So crude oil continues its end of the year rally. We got as high as 60.51, which really, if you look at the chart for the last year, that will be our. Let me just do a 1 year daily chart. That will be our yearly high. So we actually had our high of the year on the last trading day of the year for crude oil. So crude oil ending the year, was as low as 42, has rallied all the way up to 60. I don't see a real strong stopping point anywhere in the near future. We've got a little bit of fair price area right here, but on the contract specific, that's not necessarily going to be there. So you've got to really look at the contract specific when you're going back on those weekly charts for crude oil. So take a look at that one as well. Next, gold. Now, gold has rallied into, we had talked about for those of you that have been following our candle-to-candle style of trade, our candle-to-candle style of trade has continued to have us in the trade from this point here, continuing to move your stop up every day below the prior candle's low. We've now come to a point where you could have a short entry. So now here's the rub. Do I get into the short or do I stay in my long? Well, here's the key. You don't have to get into your short until your long is stopped out. Because remember, this is considered, the dashed line means we wait for price to come in and then we get short as price comes back out. So price has come in and started to go back out, but you may not enter that short until we get below here. Right? You may enter that short once you get stopped out of your long, and stopped out of your long would be getting stopped out right below this 1298.30 area. If I go back to the daily chart, you'll see that is really kind of the low, not quite the low of yesterday, but it's okay to miss a little bit so that you don't get out of your long. So I'm not a big fan of reversing a trade, but this is a chance that you could theoretically reverse a trade and go from a net long position to a net short position, because you're really just looking for the top and the bottom. But other than that, if you're still in the long and we don't come down below here, there's no reason to get out of your long trade and just continue to move your stop up below each day's higher swing low. Looking at our bond, now we had talked about an entry on a bond trade using our candle-to-candle style of trading. So let's go to a daily chart here. Now remember, the candle-to-candle style of trading, we move our stop up below each day's higher low. So in this case, you moved your stop up to here. You entered the trade right here. So you've locked in a little bit of a profit on this daily chart. And this one is continuing to move higher. So, these are more swing trade style, and you've got to have a little bit more capital in the game to swing trade these futures positions, because it does require a little bit more in the overnight margin requirements. But these trades have shown to be pretty safe, pretty effective, because you're just following what that daily trend looks like. Looking at the Aussie, so the Aussie, we had a breakout long. That breakout long, I feel like Saturday Night Fever, staying alive, as we have not yet been stopped out. Remember, you enter the breakout right here. Your stop goes below the last pivot low. So we broke out above here. We came back down, and now it's kind of continuing to chop up. At this point, still not a huge believer in it, frankly. I'd be very okay if you move your stop to break even. If I get out of this thing at break even because it's not working the way I want to, and then it pops, okay, no problem. Sure, I missed one, but I've also protected myself. So no reason to hold on to something that's not working out. The Euro trade, I actually probably should have removed these lines, just frankly forgot to on our last recording. That was the one that did not work out, and that's okay. We're not always going to have every trade that works out. Originally my Euro position, I intended on getting all the way down to here. We didn't quite make it there, and now we've rallied up. We're just about to set kind of this new high area. Looking at this on a weekly chart, you've got a potential reversal way up here, but really nothing major to stop us until we get up to there. So I'd be perfectly all right with buying on a little bit of a pullback, especially into this area right here, which you can find on the 4-hour time period. Right through here on the 4-hour time period, because this area was resistance, was broken out, and then we had a fair price value area above those resistance highs. So these areas of resistance where we had a little bit of consolidation, see how we had that areas of resistance there, and then we had slightly higher rising highs. That's a little bit of an ascending triangle pattern. It's not a fully formed ascending triangle pattern, but we had a little bit of fair price value just above the breakout. So that could be a decent little opportunity to get long on the return back into that area. Now, mind you, I'm finding this on the 4-hour time period. So on the 4-hour time period, you're going to have a bit more risk than you may be willing to take. What I would say is adjust your position size accordingly to allow you to take the risk that the trade requires you to take in order to enter that position. If that risk is too much, it's too rich for your blood, then just stay out and just watch it. And that's okay too. You could also, by the way, go down to just to the currency pair and trade a mini lot. By trading a mini lot and going down on the currency pair, right? Because remember, when we're trading the 6E, you could go do the Euro USD. Oops. If you do the Euro USD, you essentially have the same setup, the same trade. We find it on the 4-hour chart in the exact same place. And you could do it on a mini lot or even a micro lot if the futures contract is too wide and too rich for your blood. Canadian dollar, I didn't put in a trade. I was still waiting on the pullback down below here. I was tempted to put in a long right in here. Have not set that in yet. So there's frankly nothing in here that I'm in love with as far as a reversal potential. So I'm holding off a little bit, trying to stick more maybe to the 4-hour time period on this Canadian dollar, trying to find, I've got this area down in here that I like really kind of the best, and primarily because it was a fair price area here and here and here and here. And, once a price level has been broken, all of the old orders that existed in the past have to be gone. We know that. But it doesn't mean that that's not a psychological place where new orders have been accumulated and been put in place. And I think that's kind of what we have here on this area in the Canadian dollar. Last but certainly not least, looking at our Great British Pound and the Japanese Yen, the breakout in the Great British Pound is still continuing to rally. So if you're still in that long position, tally ho, good job. Keep riding that thing up. When I look at where the stopping point is on that, let me make this a bit bigger here. My stopping point on that, as we see, we've just popped out above here on the daily chart. If we get above there, we call this clean air, right? This is clean air. If we can pierce this area. So if we get above here, if we can get above this area right here, and this area right here has already been tested once, twice, it's almost like 3 times a lady, right? That area gets pierced. There's clean air for price to run all the way to this region. So keep that in mind on the Great British Pound. Japanese Yen, we still have an area in play. Down below here, we've got an area up a bit higher on the bigger time frame. This area is pretty interesting to me. I don't have a line set up on it yet, but this area could be one to keep an eye on heading into the week. So pretty busy week this week in the markets overall. Life gets kind of back to normal. Everybody goes back to normal schedule. We see the life coming back. We're gonna get jobless unemployment or jobless claims or whatever the number is. Coming out this week. We've got a shortened week. So for those of you that sold options, it was a good week last week to sell options. I wouldn't be surprised once again to see a little bit of that sell-off continue and heading into next week. But so far, that just means a better buying opportunity, and there's no reason to not think otherwise. 2018, brand new year. For those of you that are looking for some more information, please feel free to reach out, and I will leave me a comment in the section below, and I will talk to y'all soon. Thanks so much, and have a great day. Happy New Year. Stay safe.